Why this part of the world? What opportunities do you see in Southeast Asia?
Yeah, thank you. Good morning, everyone. I think it's a great opportunities that we're facing in the Southeast Asian region. Actually, we're looking at the fourth largest economy of the globe. And also very interestingly, we can observe that in the past few years, the internet literacy as well as the internet usage in this region has been really booming. Currently, there are already over 400 million internet users in this region, and we do expect that the growth rate will continue. Where also the percentage of penetration of the internet users in this place is also skyrocketing. For example, the time that people spend on the internet in this part of the world is already the highest across the globe. In addition, we're also seeing a boom in terms of entrepreneurship in this particular region, and there are upcoming unicorns, and there are also a lot of technology applications in this place that are really suitable for this marketplace. So all in all, we believe that the tech uprising as well as the also the young population, which with an average age below 40 years old, is actually very promising in terms of production, in terms of consumption, and also in terms of cooperation opportunities with other parts of the world. And Hong Kong Exchange has been really positioned to serve this market with a total solution.
So we talked to you on a day and during a year where we see increasing pressure on the risk of some of the big Chinese tech giants like Alibaba and Baidu having their listings being kicked off, their US listings, right, because of the political pressure coming from Washington. Does that invite opportunities when it comes to HKEX? Do you think there's a better home for some of these new economy tech companies in China, in Hong Kong, rather than the US?
Where I believe that, for a lot of the tech companies, especially originated from China, currently they're experiencing a very challenging time. They have to face the regulatory challenges in the US. They also have to consider other options in terms of listing venues. But I'm confident that Hong Kong is an ideal venue for them, both in terms of the listing environment, because we offer a very transparent and a very globalized standards in terms of listing. But in addition, we also offer a very deep liquidity with huge participants from all across the globe in terms of investors. We have already 50% of the trading volume contributed by international investors in this part of the market. So we believe that a lot of these Chinese tech companies can find home in Hong Kong. And as a matter of fact, in the past year and a half, we've already welcomed 10 Chinese tech companies coming back to Hong Kong for listing. And with the passing of the bill and potentially signing of the bill, we believe that that trend will continue. But in terms of the listing format, actually these companies do have quite some options. They could either list in the form of a secondary listing for certain qualified issuers, and another alternative is for them to do either a dual primary listing in Hong Kong, as long as they meet the listing standards in Hong Kong, where some of the companies may opt to delist from the US first and come back to listing in Hong Kong or this part of the world. And with all, not just this success of all these listings is sort of proved the resilience as well as the attractiveness of the Hong Kong market, but also we're seeing the trading volume as well as the shares registered in Hong Kong have also been increasing since their listing.
Does Hong Kong and the Hong Kong Exchange have the capacity to host all of these tech giants, or will this cause market imbalances? Of course, we've already seen the moves on the Hong Kong dollar.
We believe that Hong Kong offers a very deep liquidity pool here. Not just we have a lot of these international investors in terms of hedge funds, mutual funds, ETFs, etc. But we are also, providing the connectivity to China through a StockNet. Now, StockNet actually contributes around 10% of the trading volume in Hong Kong, and that actually percentage has been going up ever since 2020, very rapidly. And in terms of all these, the Hong Kong IPO market depth, we could actually also, be showing everybody that is, very great for us to welcome like the biggest number of IPOs in the 7 years out of the past 11 years in terms of IPO funds raised. So we believe that this market is not just deep, but also offers a variety of investors and offers various accesses to investors through various means.
Of course, there's a reason that lawmakers here in the U.S. are trying to delist some of these Chinese companies, right? The lack of transparency. Is that not a concern for HKEX if these companies don't allow the sort of level of transparency that other companies require in other international exchanges? And of course, we've seen also the fiasco with Luckin Coffee already.
Where Hong Kong actually upholds a very high standard of a regulatory regime ever since we have been coming to place, and the particular issue that all these Chinese tech companies are facing in the U.S. exchanges has a lot to do with the regulatory collaborations between the U.S. Authorities as well as the Chinese authorities. But that actually has been, that particular question has been resolved in Hong Kong a long time ago, because there is a very good mutual understanding and MOUs already in existence between the Chinese authorities and Hong Kong authorities in terms of the regulatory exchange of information. And that part, is not a really an issue in Hong Kong, quite some time ago. So we believe that a lot of these Chinese tech companies, as long as they meet the regulatory standards in Hong Kong, they're welcome in Hong Kong. But that doesn't mean that all of these 190 Chinese companies currently listed on the U.S. stock exchanges will be able or eligible for Hong Kong listings. As a matter of fact, probably a number of them won't be able to do it.
How much of a blow has the delay, we don't know for how long, of the Ant Financial IPO? And is that also a cautionary tale as to this kind of swift action that Chinese regulators can take when they set their mind to it?
Where the Ant Financial particular case, we're not really going to comment on this individual case. But in terms of any specific issuer, in terms of when they can list and where they want to actually get listed, and what is the right time window for them to come to the market, is actually very dependent on the issuer's own decisions. But we understand the issuers are also obliged to comply with various regulations locally. So we believe that we're actually the company will figure out, exactly when they will meet the standards and they will be eligible for applying for a listing again.